Yo, what is going on everyone? It is your favorite trader, the Master of Coin, and guys, today we are back with a brand new video. And I'm super excited for this one, just like we are with every single video, because you know and I know that we've got the source. So what are we going to be speaking about today? You see, we're going to be speaking about one of the most popular concepts in the trading community. Now, unfortunately, this concept that we're talking about, trend lines, it is so misinterpreted. Now, let me paint a picture for you, and let me see if you can relate to this situation. You ever been in the market? Well, I hope you have. That's why you're in the channel. You're in the market. Let's say you've seen the market in a downtrend, and typical retail, they tell you, put your trend line in, and then once price comes back again to touch it, you can take those sells. So you're in the market. You're like, okay, cool. I've got my level I want to sell from. You then wait for price to come up to your level. Maybe you have a confluence with a Fibonacci retracement, and then you get in the market. You've shorted the market. You see a small reaction. You're in profit. You're like, yeah, let's go. And then all of a sudden, the market just spikes you out. Now you're like, what the hell? Why did I just get taken out? Okay, maybe I was wrong. And then you see the market absolutely collapse in your direction. Now you're thinking, what the hell? What just happened? How did I just lose? What? This market is against me. The market is rigged. My broker traded against me. My broker manipulated me.
Stop the cap.
No, guys, none of that is true. Before we can even understand what trend lines are and what no one ever told you about trend lines, is we need to understand the actual nature of trading. You see, guys, trading by nature is what we call a two-sum game. Meaning what? Meaning for every winner in the market, there has to be a loser. And for every loser in the market, there has to be a winner. You see, when you're making profits in the market, where do you think that is coming from? When you're losing the market, where do you think that is going? You see, there's always has to be someone on the other side of your trades. When you're buying the market, who are you buying the market off? Right? When you're selling the market, who are you selling it to? So if we just do a quick Google search, we can understand that 70, 80, and even more than 90% of traders are losing money and quitting. Now, why are so many traders losing money? You see, guys, we need to start asking the right questions instead of trying to seek the right answers. Because ultimately, once you seek the right questions, now you're going to find the correct answers and having context behind those answers rather than just having answers. So we understand that 70, 80, 90% of traders are losing, but why are they losing? It's simply because of how they're trading. Again, guys, these trend lines, right? Do you think, for example, the bigger banks, the bigger players in the market, which, if we actually look at, for example, the market participants, we can see here that the top 10 currency traders in the world are the big banks, right? JP Morgan, UBS, XTX Bank. Now, we know the Forex market is trading trillions of dollars on a day-to-day basis. So do you really think JP Morgan is sitting there who are trading over $1 trillion a day in liquidity and saying, okay, cool, price has just bounced off this magical line, so we're going to take it higher. We're going to put $100 million because price has bounced off a magical line. No, they have algorithms. And these algorithms that run the market move price in a very systematic way. Now, what do I mean by systematic way? Well, again, everyone is using these trend lines. So this information is put out there to generate what we call liquidity. Now, what do I mean by liquidity? Liquidity is just a fancy word for stop losses. Because if you're using this trend line, right, and again, you're buying the market on the trend line, where is your stop loss going to go? Your stop loss is going to go just below the low, or perhaps just below this low here. And obviously, you're going to be targeting new highs. So what happens is everyone puts their stop losses in a very similar way. For example, again, if you're trying to buy here, your stop loss is going to go just below the low. So every person in the world who's trading, and again, a lot of people trade similarly. Now, again, these guys, these institutions, these larger players, they're not just coming for, your $100 account. No, they're coming for the collective, for millions and billions of buy and sell orders, which are waiting in this area. Because once you've got your stop loss placed in these areas, people place it 10 pips below the low, 30 pips below the low. This generates a pool of liquidity because there's so much money down here. Because once your stop loss gets hit, if you're buying, you have to sell back the market, right? You're giving your order to the other player, to the person on the other side of your trade. How else do people trade trend lines? Well, you've got your break and retest traders, right? Where, let's say you've got your trend line, Again, you're waiting for that magical touch. And let's say again, price now stops you out. Now you're thinking, okay, no worries. Let me wait for the break, the retest of my trend line. Let me now sell the market. I can put my stop loss now, just above this resistance level or something. And then what happens? Boom, the market ultimately comes and claps you out. Why? Because of that liquidity. Liquidity is fuel of the market. For these bigger banks and bigger institutions to get in the market, they have to be taking the orders to get filled. Imagine you've got a bowl of 100 apples. And if there's 100 apples in the bowl, and let's say the banks want to come in and they want, 100 apples, well, they can't get all the 100 apples because maybe 30 of them may belong to someone else, 5 of them may belong to someone else, etc., etc. So what they have to do is they have to trick you to get rid of your apples so that they can take the apples off you. And now once they've got their apples, well, they're laughing. So what I want you guys to understand now is how we can actually use trend lines from a smart money perspective. We can use trend lines in two main ways. Number one, we can use these trend lines as targets. Hypothetically, let's say, for example, we've been trading to the upside. And now, let's say we've got a point of interest down here. We're looking to take our trades off for whatever reason. And we see price start trending to the downside towards our point of interest. Once we see price start to trend to the upside, we can now use these trend lines up here as a target. Because why? We know people in the market have been selling. Again, where would the optimal entry be? Again, your optimal entry in this example would be somewhere like here. But we can use these trend lines now because we understand that all of these retail traders, they've been trying to sell the market here, sell the market here, and potentially even looking to sell the market again if it taps off it again in the future. So what happens is there's liquidity, there's stop losses on the other side of these trend lines. So the algorithm of the market, guys, is going to be magnetized to these levels so it can take the liquidity. We can also use trend lines for confluence. What do you mean? You just said trend lines are areas of liquidity where, prices being magnetized to. So why would you use that as confluence? Well, let's say, for example, you're in your uptrend, right? You've got your higher highs, higher lows, higher highs. Now you see your trend line come in the market. We know that there's liquidity resting below this trend line. So let's say, for example, we see our point of interest hypothetically down here. What we can do now for more confluence is instead of, for example, buying the market on the touch of the trend line, is we can wait for this trend line to get broken, given that it's still maintaining our bullish structure and obviously giving us, proof of demand at our areas. Given this is occurring, once we see that trend line manipulation, we know people have just been liquidated, so we can actually use that now as confluence and another telltale sign that the market is going to go in our favor, given obviously our directional bias and everything else is correct. We can use this as confluence now because people have just been taken out of the market. Right? The market is always trying to do two things: seek and destroy and rebalance itself. So if it's just sought and destroyed all of this liquidity from all of the noobs, who are buying off the top of the trend line, we now know that this could potentially be fuel for price now to go higher to the upside. So how would you trade that? Is you just have patience. If, for example, you've got an area you're looking to buy and you're seeing that trend line again align with your entry, wait for that trend line to get taken. And then once the trend line gets taken, again, given if the the market structure stays intact and given if your other confluences line up and that trend line's been taken, now you can look for your entry for price to now continue forward. So let's look at some actual examples of this and let's see how this stuff plays out. We're in the market, right? We're seeing we're in a clear downtrend, right? We've got our high, our low, lower high, lower low, lower high, lower low. And we can see a very nice clean trend line. So we understand now that with this trend line, if we extend this out into the future, anticipation now is obviously from the retail mindset, the price is going to bounce off this magical supply line and roll over to the downside. But now, with our newfound understanding, and we understand that this is now liquidity, and understanding this is now liquidity, we can now wait for this manipulated move to occur. And look at that. Do you really think that is a coincidence that price shoots above the trend line, enticing everyone to even go long or taking out everyone's orders who are shorting from the reaction here? Because look at that, right? Once price taps this trend line again and we see a 30 pip drop, people are selling the market. They're looking to load up on shorts. Now look what happens. That trend line stays intact. It gets manipulated. So now what we can do is we can now look at this manipulated move is our evidence for our institutional candle. We know that institutions are involved now because they've manipulated the market in one direction. And we can now use this as a potential area to be taking shorts off in the future. So once price now returns after that manipulated move, look at the reaction we get. Price comes into our zone, gives us a nice reaction, and now finally gives us that true move in the market and starts to trade lower and lower and lower and lower. So this is how you can use these areas for confluence. And again, I'm not going to get into refinements and why that was a area to take trades off today, but just see how we can use these trend lines now as potential confluence to take price to the downside. So let's look at another example. We can see we're in a clear uptrend, right? On our higher time frames, we've got very nice, trend line liquidity, and also on our lower time frames, we've got very nice trend line liquidity as well. So given price trades into a higher time frame level of supply, let me move that back. Given price trades into a higher time frame level of supply, then we start seeing those change of characters. We start seeing our distribution occur and price, given that breaker structure. Obviously, once we see this breaker structure, we can anticipate a reversal in the market for price to go lower. So now it's just a case of, okay, let's find our entry. Now we can use our institutional candle that led to the breaker structure. Let's refine this, actually make our hourly candle, just to make it nice and clean. So we can now use this to take shorts off. And now we've got a directional bias to the downside. And now we've got targets, right? Target 1 being this liquidity here from the trend line. Target 2 being this liquidity here from the trend line. And now, once we see obviously price start to move off in the future, it comes in, taps into our supply zone, triggers us in our trade. And now what happens is price starts to roll over. It then takes that first level of liquidity. So there's your first target done. And now it's moving and again being magnetized to that next trend line. More liquidity in the market. Guys, all the market is doing is literally taking liquidity and mitigating off institutional candles. That is literally all it's doing. Again, this line here was the example we was going through earlier. But look how, do you really think it's a coincidence how the market comes exactly to that level and then goes exactly to these levels? Guys, the market is very, very, very intentional. And we can do this all day long. Like, we can look at these trend lines all day long and see them get manipulated over and over and over and over again. But you know what? It's no good me sitting there and showing you a million examples until you actually believe it. And the only way you're going to believe it is by going and back testing this. Like, guys, all this stuff you learn online, it's not about learning it. It's about putting it into practice. Because at the end of the day, if you're learning all this stuff, cool, that's fantastic. But if you're not actually applying it and practicing it and training your eyes so that at a now level of being, you believe this, you're never going to be able to trade these methods successfully. So I challenge you. I challenge you to go after this video. Matter of fact, right now, open TradingView. If it's not open already, it should be open. But open TradingView. Find any currency pair. I don't care what it is. It could be gold, Bitcoin, commodities, stocks, anything, Forex. Find any currency pair. Drop your trend lines and see how these trend lines get violated every single time. Now, you may find one example where price does, give you a reaction, but you got to realize, guys, that, you got to give a dog a bone sometimes, right? These institutions got to make it work a couple times so that you believe it. But if you really look at all these trend lines, guys, eventually they do get taken. Use these trend lines for either A, areas of confluence, to wait for that manipulated move to occur and then take your trade. Like obviously the example we went through earlier, which is, coming up now here. Wait for that area of confluence before you can short the market, or use them as targets aligning with your directional bias. And given all of your other rules are correct, given, you actually have a solid understanding of the markets, this will greatly enhance your trading profitability. So with that being said, guys, thank you so much for plugging in. If you guys did get value from this, don't forget to drop a like, comment, and subscribe. Guys, if you are interested about mentorship and you guys do want a little bit extra, personal one-to-one support from myself, don't be afraid to reach out. I am opening up my mentorship again. So if you do want my mentorship, contact me on my Instagram here. There is a lot of fake accounts going around, guys. This is my only Instagram here. I'm going to blow it up on screen now. So if you guys, I'm never going to message you first. I'm never going to ask you for Bitcoin or all this, to trade your money for you. No, the only thing I do is offer education. And if you guys do not hear my voice and don't get on the phone with me or hear me in a voice note at least, guys, it's not me. So here's my only Instagram. Feel free to contact me here if you guys do want to know more about the mentorship program so that you guys can ultimately become funded traders. So yeah, man, I'm super excited to really take you guys to the next level. Any video suggestions, feel free to leave it in the comment section down below. And with that being said, I'm going to see you all at the top, from the top, because the bottom is way too crowded, man. Sheesh!